From the floor of the CME Group, this is Danny Riley on today's Cash Close. And the name of this video, crude oil drops 13% in 3 days. Is Iran back online? The high of the day in the S&P came in at 1914 even after the open. The low came in at 1889 even just after 2 o'clock. And last, on the cash close, we're 1896 half. We're down 34.75 handles. Total volume, 2.1 million minis trade, and 7,000 big S&Ps traded in the pit. MOC, the MIB started showing size to buy, and the actual MOC came up by 800 million. That would be 5.3 billion bought on the last 3 closes. Okay. Tomorrow we have the MBA mortgage applications. We have the ADP employment number. We have the 3 and 10-year note announcement. We have a 30-year bond announcement. We have the PMI services index. We have the ISM non-MFG index, and we have the EIA petroleum status report. Now, some wicked nut changes here. Dow down 1.75, NASDAQ down 2.2%, S&P down 1.85%, WTI down 5%, bonds traded up to 163, and gold closed up 0.2%. Now, today's sell-off wiped out all of Friday's big rally. Now, after that big $4.4 billion buying balance and that rally up to 33, you didn't hear me talking big bullish stuff. I've not been doing that because you know what? Thus far this year, every rally has failed. They've led, we get whatever kind of follow through you get on an uptick. S&P stalls out. We got up to the 1930 level. Sunday night comes in, down on Sunday night, down on Monday. Crude oil leading the way, and then today overnight, bad China numbers, more talk out of Asia, and lower energy prices. But here's the deal. I still talk to a lot of hedge fund traders, and one hedge fund in particular trader told me today that he didn't think that the weakness in crude oil was really so much tied to China. He said that there was a rumor floating around amongst some of the bigger hedge funds that it's Iran are starting to undercut prices, and I believe that. He said that that was kind of what was going around, and it started on Friday, and it still was kind of floating around amongst a lot of these trading desks that are always looking for things about why the markets are moving, and that was what he pointed to. And I believe that. I think that Iran's got a bucket full of oil, and they want to dump it. And despite President Putin's push to try to pull these OPEC members together, I doubt that with all these different wars going on, that's going to happen. So, are we going back down to 26 bucks? I don't know, but at the end of the day, I'll tell you what, this is a pretty sharp decline in 3 days. What took 4, 5, 6 days, 7 days to build up took 3 days to knock down, and that's generally not a good sign. But anyways, look, I'm going to continue to claim or continue to say that we're just too early in the year to start putting our foot down for a major rally or for a major low. There's just too many moving parts here. And that said, the S&P's inability to hold any rally here and these sharp declines in oil are going to continue to make it hard for the bulls. We'll leave it like that. We'll see you guys on the opening print.